How is everybody doing? Today I'm going to be bringing you my Draw on Liquidity Masterclass, and it's not necessarily a masterclass, more of us simply going over the notes pretty quickly, hopping on the charts, showing a few things, and more directing you towards the live backtesting videos, because that's where you're really going to see, right, these principles put into effect, coming from, a higher time frame into a lower time frame, and me being able to hold the trades to the draw on liquidity. If you don't hold the trade to the draw on liquidity, there's no point in knowing it, right? You can know the direction it might go, but if you don't know when, where, and why it's going to run that draw on liquidity, you won't know, right, when to catch the manipulation and be able to hold that draw on liquidity. One of our key understandings is our high versus low resistance liquidity runs, and knowing when we put in that high resistance, high or low, and right, there's no need to continue to run past it. We put in, right, the high probability order block and are able to enter from there. Every single thing on here I use, and I've seen a lot of people say, oh, you'll get analysis paralysis, this and that, it's too much. It's all of what ICT teaches, right? There's nothing on here that is not part of ICT teachings. I don't really care if you think power of 3 isn't ICT, right? With time and aligning time, it's very obvious. You can do that on practice within your own charts, because I'm not here to argue, right, what works and doesn't work, because I simply know that it works because of how much time and effort I've put in to my own learning and, my own teachings to be able to, right, bring this forth, show trades, and, have the evidence to back it up, right, with the data collected and, simply just how long I've been looking at the charts, right? It's not 5 years or nothing, but, right, 1 or 2 years constantly, 10 hours a day, whether it's, tape reading, back testing, that adds up, and, you'll get what some people get in 10 years in a year or two. And that's how you really hunker down and get better at something super quickly and, put a change and make change in your life. First thing and biggest key thing is weekly profile. I know I don't really have a video on that, and that's what we're going over in the Discord, as of this moment. But right, I will be bringing videos soon over to cover that. The weekly cycle as well into your midnight open, right, with your previous day close, right, was it high, low, or inside? Our internal to versus external liquidity, and internal to external, external to internal. Our low resistance our low resistance liquidity versus our high resistance liquidity. Do we have equal highs and lows above or below higher time frame and lower time frame? Right, what is the market structure showing us? And that goes into order probing, right? Our failed versus reactive PD arrays. Are we forming bearish breakers or bullish breakers? As well as what is the open high low close or open low high close of each candle showing us? Simple power of 3, as well as, right, your hourly, 4-hour inside of, your lower time frame, 1 minute, 5 minute, 15 minute, aligning with internal versus external. Do we have a higher time frame into a lower time frame, SMT divergence, higher time frame into lower time frame market maker model? You can always check higher time frame if DXY is bearish or bullish compared to the chart you're trading, whether it's Euro or NQ. Do we have a news event driver for the week and the day? What time of day are we looking to trade with what time-based liquidity levels? Have we formed a false breakout outside of the range, broken a key high or low, and how did we react to that key high or low? Inside of the range, where are we? Higher time frame, OTE, equilibrium, right, within the monthly time frame, the weekly time frame, the daily time frame, the 4-hour time frame, the 1, and I like to use the 2-hour time frame sometimes, the 15 to 30 minute, the 1 minute to 5 minute, and even if all of this is aligning, our 15 to 30 second. Inside of an order block or rejection block, however you like to trade, and whatever is set up for you. Always using our if-then thinking. High time frame key level and manipulation times are required for the best high probability turtle soups. Failed PD arrays and opposing high time frame PDAs create high resistance liquidity runs and stop low resistance liquidity runs. Price will always seek to fill imbalances and inefficiencies, take out highs and lows, then take out high and lows, right? We're not just going to rush to a higher high or a new lower low. right, without filling the imbalances and inefficiencies, manipulating, and then delivering to our draw on liquidity. Right, price does not always need to be following order flow. Price may want to accelerate to liquidities due to time. Right, higher time frame where we were bullish on NQ and we saw big drop, big bearish drop. And why did we have that? We'll get onto the chart and show that here in a little bit. Right, with the draw on liquidity coming into our IPTA look back and into a manipulation lower into a higher time frame SMT. Right, what is the key? What is the key to turtle souping the reversal to your draw on liquidity? It's going to be our narrative, our when, where, and why. Right, efficient price delivery is obvious from the moment we expand from the order block, even before we create an obvious high probability order block. Right, by how we react to our high time frame key area, as well as how we react outside of our range, looking to close back within the range. That's why I'm, fading IFEGs all the time, or, not necessarily looking for IFEGs, and I don't care about the IFEGs and, the whole middle of the range. I care about the highs and the lows and how we react to them, right, and how we form our key highs and lows. Let's get into the charts a little bit and, cover, everything we've shown here into how to, not really form a narrative, but, right, how to use all of these in coordination and be able to find, your bias and draw on liquidity. Okay, so it's all right. Won't be able to see the lower time frame, but right on the 5-minute we see, right, we start to reaccumulate. We won't be able to see that lower time frame market maker model. What we see, we deliver sell side, so we shouldn't have to deliver buy side, right? We deliver buy side, so we shouldn't deliver sell side past this candle. This low should be reactive, right, from this wick, right, liquidating the low, delivering back inside the range. Down close candle, right, deliver buy side, right, sell side should not have to be delivered here, right, after we, right, deliver past our high into, right, our FEG, and I'm not so worried about the FEG, right, I'm just looking for our, right now that I know that we have started delivering bearishly and mitigated this whole fair value gap, I don't really care about the inversion, right, I see how we're delivering in the weekly, inside the daily, right, as well as our candle closures on the hourly, right, inside of the 15-minute, pairing those on top of each other, and as well as, right, when we start to move this a bit lower, right, after we deliver this buy side into sell side, right, how do we keep reacting, right, we deliver sell side here, come back within the range. This isn't a key low, these aren't key lows to where I would be like, oh my gosh, we came back within the range, right, this is just, pretty much giving me a re-entry. Right, we've closed below the candle. You would like to see this fair value gap left open, right? But we can use this order block and then deliver lower. Here's where that draw on liquidity really blesses you, is with your RR and being able to hold, right? If you know the draw on liquidity, right? Put the stop at the high. If you know that it's not just going to be this Asia low, right? You can take partials, right? But, even then, I'm not going to do that. Right, if I know, right, we're with inside the previous day range, we have this obvious low resistance into the breaker fair value gap, right, I can come on the 15-minute or 30-minute, see that, and, that's 200, that's a, like, 2.5 RR, and obviously I'm not turtle souping this, I'm just showing, simple draw on liquidities, from a false breakout of the range into delivering back within from the key level. Right, so from here, right, and how do I know this high isn't going to be ran, right? Like we've been talking about with balanced price range, we deliver buy side into sell side into the internal, right? So we should deliver external now. We've delivered the sell side. It makes sense coming into 930 that 830 has done the damage. 830 is manipulated. 930 is going to continue, and then we'll see what 10 does from there, depending on how 930 continues and how it reacts. Because 10 could, right, come back up, it starts to slow down on us, shows us bullish, reactions, comes in soups, and then delivers lower. Right, there's nothing wrong with getting stopped out and being wrong or getting stop break even there. If you know that the higher time frame draw on liquidity and all, right, our manipulation has been set in, right, a little distortion or a little reaccumulation should not scare you into, you know, a manipulation of highs, right? And then us reacting to those key highs and delivering lower. Getting all that off the chart, right? Looking on the 1 hour, you also see that it's a CPI day, you know, so with the low resistance here into Monday's low on the daily chart as well, right? With the low resistance, right? And even if it's 1 or 2 micros, right, you're able to ride that and absolutely bank, you know, with a decent, you know, size stop loss on a CPI day, right? We deliver sell side one more time, 50% of the range, right? And just fall. Same thing here, right? Internal, external, internal, right? Higher time frame, external, right? We see we have the breaker, or, you know, if we like look on a 15-minute, right? Obvious high time frame fair value gap after a reaccumulation, right? It's going to give us a little bit of, you know, pushback. You know, nothing too serious though there to worry about, right? We don't get the hourly CSID, but we see the 30-minute and the 15-minute inside of our 5-minute, right? And we're not, you know, that scared, you know, about really anything. We know that, you know, we've closed breaker here, high, you know, lower low, higher high, lower low, and then, right, I said that completely wrong. You guys know how a breaker looks, right? Bearish breaker formed. So that's how we react to it. Oh, good lord, wrong button. FEG left open, closed below. So it's, you know, not that bad internal to external as well, right? All of, you know, the things we had listed inside of our drawn liquidity checklist are falling into place here, right? Leading into a right high time frame key level and manipulation time for the best high probability turtle soup. Leading into, hey, I didn't get my entry, right? Where can I, you know, look at order flow, and where will, you know, can I get an entry, right, with a safe stop and be able to know that, right, our drawn liquidity is going to hold and, you know, continue drawing lower. Our previous day low is hit into, right, Monday's low being hit a little bit later on into, right, our, you know, obvious fair value gap here. Looking on the hourly, Monday's low, low resistance, all the way down. And, you know, even maybe taking out Thursday's low, but I don't think we did that into this Thursday. I could be wrong. Yeah, just barely edged it. Right, but with this being turtle soup low, right, anticipated failure swing before turtle soup low, right, you know, obviously, you know, lower time frame, if you start to see a little reaction from that kilo, right, you know, you can probably just go ahead and take profit, and or, you know, taking profit within CEO of the wick, or, you know, like, this isn't the low-hanging fruit, so there's no point, you know, for me personally, you know, holding, you know, 100, like 200 extra ticks and risking it coming back like 400, you know, to still be up 1600, but, you know, there's no risk there, right? That's, you know, risk to reward with inside of, you know, the risk to reward that you've already set for the trade. So there's no, you know, real reason to like stretch that out. You know, like, obviously once you react here, you know, you can probably just, you know, keep letting it ride. But once you see, hey, this high is reacted, you know, into, you know, your 3 o'clock and 4 o'clock close, you know, even around 12, like, I'd probably be taking most of my profits. And you see right around that 12, we get a little retracement. We didn't quite need to reach into the fair value gap, right, and then delivered lower into 2 p.m., right, into 3, and then, you know, 4 just kind of chopping around. And that's kind of all I have for this video, right? Just, you know, pretty short, simple, right to the point. If you really want to, you know, get into more trades or like more, you know, setups like that, obviously we took that one live in the Discord, you know, link in the description. But the live backtesting videos are amazing. The last one I traded was US CAD, and, you know, it's not in queue, it's not my normal. Didn't really know when news was. It didn't matter. It still fed us, still ate good. Still were able to, you know, have a pretty good backtesting session. It was like 80-90 win rate. So, you know, and along with, you know, the high RR with that turtle souping gives us. So, you know, you'll be able to see me, you know, kind of talk about all of these and kind of put them all into one, right? Like how we did with the chart that was in front of us today. And, you know, be able to follow through and hold to our drawn liquidities and, you know, have that narrative, you know, for multiple trades back to back, so you can start to do it yourself. Hope you guys enjoyed this one. Hope you guys have a great rest of your week, and I'll see y'all later. Have a good one.